We get straight to business. All right. Now, this class would make sense to you if you watch the last two classes, right? Which I hope you did. But if you didn't, you watch this class and then you could look at the last two after, right? So, and I'm gonna keep it short because people always complain, oh, class too long, the attention span short, can't make it, right? But you don't know, you spend 1 hour in this lesson and you get the lesson done pack. You don't have to go through it ever again, you know? But I guess if it's life, it's different. So, anyways, right? I'd love to have more participation, right? So if you could, yeah, that's what I was saying. 1 hour good. 1 hour gets the lesson across, because you taught the lesson, then you practice the lesson, you test the lesson. But what we gonna do, we'll go through what I have done for today, right? And then we're going to go over some trades I sent out this week, and I'll explain why I took the trades, and I'll take questions. And then from, let's say, tomorrow, I'll be, since everybody at home, probably nobody working, right? I'll be putting on the Zoom live whenever we trade in the morning. So like, let's say from 7, I'll put on the Zoom live, and I'll just leave it running. So if you want to jump on and look for trades alongside, you're more than welcome. All right, I'm gonna send that notice in the group as well. So okay, everybody can see the screen. Let me get down to it. Let me get down to it. All right. So we're currently on the topic. Let me ask Sonny, what topic we on? What topic we on right now? See if I even paying attention. Supply and demand. All right, that's what I'm talking about. Supply and demand, right? We have supply and demand, right? The most important topic and the most important confluence in trading, right? Sometimes you could just learn supply and demand alone, and that's all you need, But the more we know, the better. So last class we covered basing candles, impulse away, location of the zone and whatnot, right? But today we're gonna go over another few confluences to validate supply and demand, right? One is called consolidation away. Consolidation away, right? Then we're gonna go over extreme zones. We're gonna go over validating CP zones, right? So quick recap, right? We know supply and demand is made up of rally, base, rally, right? And then we have drop, base, drop, right? Which is, and then we have rally, base, drop. Sorry. And then we have drop, base, rally, right? We know that these bases, when you have a rally, base, rally, pause in the market, rally, prices no balance, prices now pushed out of balance, which creates an imbalance, right? We know the rally-based rallies, the pause in the market is called the CP zones, right? Also known as continuation patterns, right? But we call it CP, right? And we know that these bases at the Rayleigh base drop is called the valleys and the peaks, right? So this will be the peak, right? And this would be the valley, right? All of this is advanced technical analysis, right? Which, if you spend some time to master, you would be a super trader, right? You'll be able to take trades with your eyes closed, right? So yeah, so here's what you need to know when scoring a supply and demand zone. We know how to identify the zone, right? We know what our pause in the market look like, right? This is our pause right here. Right? So we know this is a supply zone, right? Drop, just like I said, drop, base, drop, right? Drop, base, drop, the first one, right? No, or the second one. And we know that this is the CP, continuation pattern. We know that this is the impulse away, right? We know this is the arrival to the zone, right? That is simple characteristics of a supply and demand zone. I know Nick mastered this because Nick eat, sleep, and you know what? Supply and demand, right? So when the market, and you can take notes, when the market making its departure, you want to see two extended range candles. What I mean by two extended range candles? Two candles, two bearish or two bullish candles leaving the zone, right? That's just to score the zone high. So here we had one extended range candle here, right? This one here. We had two extended range candle, right? Three, and it's only on the fourth and fifth candle the market started to slow down. This is good news, right? That's telling you that the zone is strong, right? So here we had another zone. Base, base, right? And then we had rally, right? So, like I said before, you want to see two strong extended range candles leaving the zone, departing the zone, or if you get three, even better. So here we had these two extended range candles here. One, basically it's just bullish or bearish candles departing the zone, and not really pulling back. And then here on the third candle we had to pull back. So, and then also we had four basing candles, right? Less than 6, very good, right? When the market drop, when the market come in hot, the arrival come in hot, right? And the base for a short time, and then the patcha leave hot. That's a good sign, right? So here you would have took a buy right here, obviously because you're buying at demand and the market will test the demand to go long, right? You score this level, the departure was nice, and when the market retraced to test the demand, you enter long. Now, all of this information is very nice, but it really solidifies in your muscle memory when you actually practice it and when we practice it. So right now, I just showing you all the confluences and teaching you all the rules, but then it will have a point in time where we have to put it all together and then practice it, right? So here's another rule you need to follow. And, going back to the booklet, if you read the booklet, it has all these rules. You can write it down. I could also write it down, but you can write it down as well. So here's one of the rules, key rules you need to follow, right? It's very simple. when you have your rally, base rally, right? When you have your base, would it be a base for a rally base rally or a rally base drop, right? We have something we call consolidation away. That's part of your checklist, right? Basically, you have your departing candles, the candles that departs the base, right? Now, if, for example, one candle, one candle, uh, yeah, if one candle, okay, let's just imagine this as one candle, right? Right, so this is the base. All right, you hear me? All right, so I'm using candles, but this is the base, rally, base, rally, right? Now, the impulse away, if it's only one candle, right? Let's say this is a candle, and then the market pulls back for the very next candle, then the zone is not usable, right? You can't use the zone. You need to have one candle consolidate away, right? So the market needs to stay away from the zone for one candle, right? So I'm gonna write this down. After the departing candle, the market needs to stay away from the zone for at least one candle before returning to the zone for the zone to be valid, right? This simply means you need one candle to consolidate away from the zone for the zone to be valid. What do I mean by that? So here we had, let's say this was the departing candle, right? If the very next candle after the departing candle pull back to the zone, then we can't take that zone. Because it had one candle push away from the zone and then another candle that stayed away from that zone, made the zone valid, right? Not just valid, but tradable, right? So here we have a live example. This is a supply and demand zone. We had a pause in the market, right? We had a rally, base, rally, right? Now, as you can see, the very next candle did not stay away from the zone. The very next candle did not stay away from the CP zone, right? It came straight back to the zone. That means that the zone is not tradable. So when you see an impulse away from the zone and you see the market pull back to the zone one time, you can't take that trade. You have to wait for the market to stay away from the zone for at least one candle to make that zone tradable, right? We call that consolidation away. So for every supply and demand zone that you validate, you must have consolidation away. It simply means that the market cannot return to the zone for the next candle, right? The longer the market stay away from the zone, the more stronger the zone is for when it come back. So here we had a rally, base, rally, right? And then we mark up the zone right here. We see the market came close, failed to reach the zone. That's why we just enter a few pips early. Right? When you're finished, can you go back to the room? Okay. In short, we call this consolidation, right? That simply means the market has to stay away from the base for at least one candle after the impulse away, after the move away, right? You have any questions about that rule?
Yeah, I have one question. So if you have a rally away from the base, but you have a wick coming back touching the base, that doesn't count.
Okay, I've seen that many times and I've asked myself that question many times, right? Basically, if the market come back to the zone, that lowers the odds of that zone working out. Yes, sometimes I might take the chance, but you want high probability trades. So it's best you just, if you want to only take high probability trades, then you just take trades that follows your rules strictly. Yes, the zone might work still, but that's just lower probability because according to the rules and according to how the market works and how the money flows through the market, basically, if you have an impulse away and the market stays away, then you have a lot of limit orders on the base. But if the market comes back and touches the base, then that just removes a portion of the orders that's there, and which makes the zone less tradable, right? But sometimes I would take the chance. You know, they say a zone is only tradable maybe 2 times for the most, right? But a lot of the time we just stick to one touch, just to be safe. But sometimes the market will actually tap the zone at least 2 times before dropping, sometimes even three. Like this USD JPY trade I had the bigger one. Right? So here we had an example of a trade I sent, right? Daily extreme supply zone, right? This was a rally base drop, right? On USD JPY, I sent the signal. We did enter early because stop loss was above. Because like I didn't want to miss out on this trade, so we entered early, but we stop loss was in a safe area, right? Now you can see here the market came up and tapped the supply zone 1, 2, 3, 4, even 5 times. But the more time it touched, the more the zone eat away. But that isn't. But the zone is still a zone until it is removed. But you always want to get on the first touch. So look, you have a nice little zone here also. You had a drop, base rally, drop, tap, move up, right? And then a few others here and there. Any other questions about that topic? Nick, you don't have nothing for me? All right. Well, I guess if I ask you a question, you can answer it then. So, Aaron, I know you're a very studious individual, right? What did you learn tonight?
I learned, well, the first confluence about it supply and demand, which is consolidation away. You said it shows up in rally or rally-based drop. There is usually a consolidation away. And then the rule says after the departing candle, the market needs to stay away from the zone for at least one candle before returning to the zone for the zone to be valid.
Well,
Yeah.
that was beautiful. That song like somebody who learn what I just taught. I'm proud of you, Aaron. Trust me, I'm proud of you. I'm very proud of you. I know you take notes for that one. I know you take notes for that one. But yeah, so if you can get that to stick in your head, you'll be fine. All right, if you get that to stick in your head, you'll be fine. So next we have location of this zone. No, extreme zones, right? Extreme zones. What I mean by extreme zones, right? So basically, in supply and demand, you would have zones within zones, right? So you might have a weekly zone, and in that weekly zone, if you drop down, you have a daily, right? Let me change the color actually. I need this. And then in that daily, inside that weekly, you go have a 4 hour, right? And then in that 4 hour, inside that weekly, inside that daily, you gonna have a 1 hour. And inside that, and so on and so forth, right? So on and so forth. So when I say extreme zones, what am I referring to? I'm referring to, let's say this is I'm gonna label it weekly, right? Daily, right? For our 1 hour, right? Now this is like I said before, this is a very technical topic. So if you're a beginner, it's okay if you're not getting it down at first, right? So what I mean by extreme zones, right? Let's imagine this is a supply zone, a rally base. Well, extreme zones could only be found in valleys and peaks. First of all, make note of that. Extreme zones will only be found in valleys and peaks, right? So if you have a valley, a peak, right? Actually, I'm gonna draw it up like this. Okay, so you have a weekly supply, right? This is a weekly supply zone, right? Now, in that weekly supply zone, you go up to the daily, you go up to the 4 hour, you go up to the 4 hour. Basically, you're marking out the base on that valley of peak to the very edge, right? Would be your extreme zone, right? So if you're a trader, right, and you want to get into a sell at the supply zone, but if you find like because the weekly zone is huge, you want to lower your risk, right? So you'll be taking a chance. Normally, if you enter in weekly trades, you enter on your weekly proximal line, right? Your proximal line will be here, your weekly proximal line, right? And then your weekly distal line will be up here, right? But if you feel like, okay, you want to risk less, you don't want your stop loss to be so big because the weekly zone is so big, you're gonna be like, okay, let me incept this zone. So now you dive into the daily and you find the daily zone nearest to the peak, right? The daily rally-based rally, which will be deeper inside the weekly zone, right? So now we have a smaller zone, so you're risking less pips, right? But there's also a chance that when the market comes back to retest the zone, the market might just tap the weekly and drop and not get to the daily, right? However, in supply and demand, the extreme zones work the best, right? So you want to try to get in on those extreme zones because your stop loss will be tight, you will be risking less, and your risk to reward will be so much greater, right? So what I like to do when I find a trade, I would try to get the 4 hour within the daily, right? The 4 hour extreme within the daily. So let's say, and I'll show you an example of what that looks like, right? You find your weekly base, okay. Now you dive into the daily, right? You dive into the daily, and then instead of buying on the daily proximal line, you go deeper into the base and you take the 4 hour, or you could even take the 1 hour, right? So let me see if I can actually find a live example of that for you. Let's see. USD JPY. Okay, great example. Great example right here. Right? We have USD JPY, rally base drop. Now this is the weekly zone. The weekly zone starts right here. Right? This is the weekly zone. Right? Because we're on the weekly time frame. We know this is weekly supply. Right? We had that rally base drop. Right? And 1 candle away, 2 candles away, consolidation. Now the market has returned to our zone. Now, yes, we can enter short down here. Yes, we can enter short down here, and we will still be correct. We could enter short down here, right? Target this. But we're risking 283 pips. Now, you as a trader, sometimes you don't want to risk all that. You want to minimize your risk. Yeah, you can take this trade, but you won't be in this trade for a few days, you know. Depends on how much patience you have. So instead of taking the weekly entry, the weekly supply, you're going to be like, okay, let me look for the daily supply extreme level. You want to look for the level closest to the distal line, right? So then you hop on down to the daily, right? And now you find your daily rally base drop, which would be here, right? Find your daily rally base drop, right? And wouldn't you know, the market came up to a daily extreme supply and enter, right? So now you minimize your risk. Instead of risking 200 and something pips, you risk 90, let's say 90 pips by entering on the extreme. And your risk to reward is so much greater, right? Now you could even say, okay, you don't want to go down to the daily, so you want to take the 4 hour. So you zoom in on the daily supply zone and you look for the 4 hour extreme, right? Now, as my partner was asking the question earlier, here we have the rally base drop. So the base gonna be like, okay, so if this is the basing candle, remember the rules, right? You see this is the basing candle. Now, we know that if the entire candle engulfs the body of the candle around it, you have to include them in the base. So because this candle engulfs the body of this candle, this candle, this candle, and this candle, we include all of them in the base, right? So this would be the base. This is a 4 hour, right? If you can remember, then I have a video on basic candles. Now, one of my partners has said, Kishel, if you have a departing candle, depart, and then you had the next candle wick up and tap that level and drop. Is it still tradable? I mean, I said you want to have high probability levels. Now, if this trade was just merely based off of the 4 hour, then you probably would not have entered on this supply because we had a retest of it. We didn't have the consolidation week, right? But we know this is a weekly level. We know this is a daily level, right? So then you could take the chance and enter on this 4 hours extreme supply, or you could just take the entire daily zone, right? But as you can see, the market did not come to that 4 hour extreme supply. It didn't come. It didn't happen, right? But let's see if we could find an example. Let's see if we could find an example, right? Okay, so here we have an example on USD CHF, right? I think we actually went long on this pair. We went long on this pair some weeks ago from the very bottom, right? So we're on a weekly time frame here, and this is the okay. Let's go on a monthly. This is a monthly zone, right? Drop, base, rally, right? This was the base. This is the departing candle, kind of weak, and the second departing candle was strong, right? So this is a monthly base. So now we drop down to the weekly. I'm going to take the weekly base. The weekly base going to be this. This would be the weekly, right? Because this is the base, and the body of this, the entire candle engulfs the bodies of the candle around it. So we include those, and this would be the weekly base, right? We take out the monthly. We remove the monthly. This would be the weekly base, right? Now we could even go down further to the daily because we're taking the extreme, right? So this would be the daily. Or use a different color for this. Black. This would be the daily, right? And then we could go further and then get a 4 hour extreme. Now me, I like the daily extremes and the 4 hour extremes. When you reach down to the 1 hour, it kind of tight. So this would be the 4 hour extreme zone, right? Tiny zone. Tiny. Or we could even take, since the zone's so small, we could even take this candle just in case, right? Right? Weekly, daily, 4 hour. If you could get a 4 hour entry, that would be beautiful. You get a daily, you take it still. Now you might ask yourself, why is those extreme zones valid? Now those extreme zones are valid because on the higher time frame it is valid, right? So for example, you had on the monthly, this is the monthly, right? You had a monthly trend line. You had your drop base rally on the monthly trend line broken, right? So now you have a monthly wow trade, right? Your monthly drop base rally. So that monthly zone is valid. If the market comes back to test the monthly zone, you can enter. So if the higher time frame zone is valid, then the extreme zone on those higher time frame is also valid, right? But as you can see, the market came down and removed the zone by maybe half of a pip, right? Half of a pip. That's why we always put our stop loss a few pips beyond the zone, because sometimes the market come close, the market completely eats away the entire zone and then moves back. So that's why our stop loss is always a few pips above. So let's say we entered here after weekly, stop loss a few pips below the zone, right? So you would have been safe and sound, right? So any questions on extreme zones? I think I explained it very well. No questions. Okay. I actually have the chat box closed, but still. Okay, let's see. This relates to time being fractal, yes. Price being fractal, yes. And time, yes, because we deal with time and the movement at price. So basically, you have extreme zones right down to the 1 minute. All right? So let me see who I go ask this question now. Can somebody volunteer to just give me a brief summary of what are extreme zones and where can they be found? Anybody? Put in a dollar for who get right. Okay. All right, I'll pick somebody then. Okay, and say, well, unmute your mic. Not everybody could read. Y'all see me messing up words on here. You gotta pull up my dictionary real quick. Autocorrect ain't even working with me. Aaron, what you were saying?
No, all I said is that it can be found in valleys and peaks, and someone else could continue.
Okay, awesome. That's 50 cents for you, right? Extreme zones can be found in valleys and peaks. Where in the valleys and peaks can they be found? And that was a very valid point you made, Aaron. Extreme zones can only be found in valleys and peaks, right? So where in the valleys and peaks? Where? Rich, Romir, Nick, Najla. Nobody want that 50 cents.
Sorry, I'm driving. Repeat the question for me.
Where in the valleys and peaks can extreme supply and demand be found?
At the bottom.
At the very bottom and the very edges. Correct. All right. Now you would love to aim for these zones because they minimize your risk. They minimize the amount of pips you're risking, right? So tonight we covered consolidation away. And tonight we covered some multiple time frame analysis and some extreme zones, right? So next class, we're just gonna be validated on when not to trade CP zones. And then we're gonna put all the rules together and start practicing complete supply and demand analysis, right? So right now, we will just go into the practicing phase, right? We hop on the charts, do top-down analysis, find out supply and demand zones. You know, everybody else will be dropping in their zones, dropping in their charts, so we can check up on it. And, you know, we'll be actually placing trades on those zones, right? So thanks for hopping on. We will end the class right here. Everybody have a good night. Stay safe. Stay inside. Wear a mask. You know, gargle some salt water in the morning. Drink a little lime tea. You know, spray a Dettol and stay safe. Yeah?